Jordan, a nation renowned for its historical significance and strategic importance in the Middle East, finds itself grappling with a persistent economic slowdown. Once hailed as a model of resilience and stability in a turbulent region, the kingdom is now facing a confluence of internal and external challenges that have dampened its economic prospects. The Hashemite Kingdom of Jordan, led by King Abdullah II, has long punched above its weight, navigating regional conflicts and providing a haven for refugees. However, the spillover effects of these conflicts, coupled with internal structural issues, have taken a toll on the Jordanian economy. From declining GDP growth rates to stubbornly high unemployment, particularly among the youth, the economic woes are palpable. Inflationary pressures, exacerbated by global supply chain disruptions and the ongoing conflict in Ukraine, have further eroded the purchasing power of ordinary Jordanians. This essay delves into the factors contributing to Jordan's economic slowdown, examining key indicators such as GDP growth, unemployment, inflation, and public debt. It will also explore the impact of regional conflicts on vital sectors like tourism and analyze the government's recent reform efforts aimed at addressing these pressing challenges. The Jordanian economy, once a beacon of growth in the region, has witnessed a period of sluggish expansion in recent years. Data from the World Bank reveals a concerning trend of declining GDP growth rates, signaling a slowdown that has far-reaching consequences. In 2022, Jordan's GDP grew by a mere 2.7%, a significant drop from the 5.5% growth experienced in the preceding years. This downward trajectory continued into 2023, with GDP growth plummeting to a meager 1.8%. The International Monetary Fund projects a modest recovery to 2.4% in 2024, but this remains significantly lower than the pre-pandemic levels. Several factors contribute to this economic stagnation. The ongoing conflict in neighboring Syria, coupled with the influx of Syrian refugees, has strained Jordan's resources and infrastructure. Additionally, the COVID-19 pandemic dealt a severe blow to the global economy, impacting tourism, a vital sector for Jordan, and disrupting supply chains. The decline in GDP growth has resulted in reduced government revenues, limiting Jordan's ability to invest in crucial sectors such as education, healthcare, and infrastructure. This in turn hampers job creation and exacerbates the already challenging unemployment situation in the country. One of the most pressing challenges facing Jordan today is the alarmingly high unemployment rate, particularly among young people and university graduates. With limited job opportunities and a growing workforce, the kingdom is grappling with a demographic crisis that threatens its long-term economic prospects. According to the World Bank, Jordan's overall unemployment rate stood at 22.9% in 2022, a slight decrease from the previous year, but still significantly higher than pre-pandemic levels. However, the situation is far more dire for young Jordanians aged 15 to 24, with youth unemployment exceeding 50%. This disparity reflects a mismatch between the skills possessed by graduates and the demands of the job market. The education system, while relatively robust, has struggled to adapt to the evolving needs of the private sector, leading to a surplus of graduates in certain fields and a shortage in others, particularly in technical and vocational trades. The high unemployment rate, especially among youth, has significant social and economic ramifications. It fuels frustration and despair, potentially leading to social unrest. Moreover, it represents a significant loss of human capital and hinders Jordan's ability to achieve sustainable and inclusive growth. Section 4. Inflationary pressures, eroding purchasing power. Adding to Jordan's economic woes is the persistent challenge of inflation, which has eroded the purchasing power of ordinary citizens and placed additional strain on household budgets. Since 2022, the kingdom has witnessed a steady increase in the prices of essential goods and services, impacting the livelihoods of millions. In 2022, Jordan's inflation rate averaged around 4.2%. According to official figures. However, this figure masks the true extent of price increases for essential commodities like food and fuel, which have risen at a much faster pace. The situation worsened in 2023, with inflation surging to 6.1%, driven by global supply chain disruptions and the ongoing war in Ukraine, a major exporter of wheat and other grains. The rising cost of living has disproportionately impacted low and middle-income households, who spend a larger proportion of their income on basic necessities. This has led to a decline in living standards and increased poverty levels, particularly in urban areas. Section 5. Public debt burden, a looming threat to stability. Jordan's economic challenges are further compounded by a high level of public debt, which has been steadily increasing in recent years. This growing debt burden poses a significant risk to the country's long-term fiscal sustainability and limits the government's ability to invest in crucial sectors. As of 2022, Jordan's public debt stood at a staggering 87.6% of its GDP, according to the World Bank. This figure represents a significant increase from previous years and reflects the government's efforts to mitigate the economic fallout from the COVID-19 pandemic and other challenges. The high debt-to-GDP ratio has several negative consequences. Firstly, it increases Jordan's vulnerability to external shocks, such as fluctuations in interest rates or exchange rates. Secondly, it limits the government's fiscal space, reducing its ability to invest in education, healthcare, and infrastructure projects that are crucial for long-term growth. Addressing the public debt burden is essential for Jordan's economic recovery and future prosperity. However, this requires a delicate balancing act. The government must implement fiscal consolidation measures to reduce spending and increase revenue without stifling economic growth or disproportionately impacting vulnerable segments of the population. Section 6. Regional instability. Tourism suffers amidst conflict. Jordan's tourism industry, once a major driver of economic growth and job creation, has been severely impacted by regional instability and the lingering effects of the COVID-19 pandemic. The kingdom, home to world-renowned historical and archaeological sites like Petra and Jerash, has struggled to attract tourists amidst security concerns and travel restrictions. The ongoing conflict in neighboring Syria, coupled with the rise of extremism in the region, has created a perception of instability that has deterred many potential visitors. The COVID-19 pandemic further exacerbated the situation, leading to border closures and travel restrictions that brought global tourism to a standstill. The decline in tourist arrivals has had a ripple effect throughout the Jordanian economy. Hotels, restaurants, tour operators, and souvenir shops have all experienced a sharp decline in revenue, leading to job losses and business closures. The loss of income from tourism has also impacted government revenues, further limiting Jordan's ability to address its economic challenges. Despite these challenges, Jordan remains committed to revitalizing its tourism industry. The government has implemented several measures to attract visitors, including enhancing security measures, improving infrastructure, and launching marketing campaigns to promote Jordan as a safe and attractive destination. Section 7. Charting a new course, government reforms and future outlook. In the face of these mounting economic challenges, the Jordanian government, under the leadership of Prime Minister Jafar Hassan, has embarked on an ambitious reform agenda aimed at stabilizing the economy, creating jobs, and attracting foreign investment. These reforms focus on key areas such as improving the business environment, enhancing competitiveness, and fostering innovation. Streamlining bureaucratic procedures, reducing red tape, and creating a more investor-friendly environment are central to this strategy. Recognizing the urgent need to address youth unemployment, the government has launched initiatives to promote vocational training, entrepreneurship, and skills development. These programs aim to bridge the gap between the skills possessed by young Jordanians and the demands of the job market. The government has also prioritized attracting foreign direct investment, particularly in sectors with high growth potential such as renewable energy, information technology, and tourism. By positioning Jordan as a regional hub for innovation and entrepreneurship, the government hopes to attract foreign capital and create much-needed jobs. The road to economic recovery for Jordan is paved with challenges, both internal and external. However, the kingdom's resilience, coupled with its ongoing reform efforts, offers a glimmer of hope. The government's commitment to creating a more competitive, diversified, and inclusive economy, if implemented effectively and transparently, could pave the way for a more prosperous future for all Jordanians.